Good morning, guys. Lavohang here, back with another backtesting video for the previous week. As you know, I'm backtesting each and every at the end of the week to see and check our price and to see where we could have entered and to also analyze our losses as we try to get more opportunities in the market. So last week I had a I could say a good profitable week, even though I took 4 trades for the week, but I took only first partials, meaning I only took my first take profits. I didn't let trades run because of it was a week of um, FOMC, and then I think we had another event. I can't recall, but I think we had another event that would have pushed the market in a way that it could have hurt me I was if I was on the wrong side of it. So today we'll be back testing the 5 minute chart because for the previous week I was using the 5 minute chart. I didn't use 1 minute chart or 15 minutes. I only used the 5 minute chart for the rest of the week. So we'll be back testing with the 5 minute chart. So these lines here, these vertical lines here, are when the sorry for that, my audio was not doing well. So yeah, as I was saying, we're gonna use these lines to see where the day started. So don't mind it when it says 1800 hours. I my time is on New York. I'm using the New York time zone. So let's go in the charts. So here is Monday. Remember that the London session is 2 a.m. Let's let's label it. Oh, London London session, and then 8 is NYC. NYC. So usually, if you are looking for a buy, or if your bias is leading towards the bullish momentum, you need to look at the previous session's high and lows. So here, price was opening, and then we left it because I was asleep here, and then price gave us this mini range here. Price gave us a mini range here, and then price broke that range and then went down. As price was moving here I was not sorry, here I was not on the charts. So we mark the last low that we can spot. As long as it is obvious to see, it's good. And then when we look left, we also have an imbalance here. You can mark it for, I want to see if price respected the imbalance. Okay. Yeah, this imbalance here was tested. Price open, came back, bounced, and then went out to take out this high. Okay. I hope my audio is okay on your side because I'm still using I need to get a proper mic so that my audio can be sound and yeah, can hear me properly. So as we mark our low, remember this is London. Now we know that okay, price went up. So price gonna give us price gave us a high for the day. Price gave us a high for the day. So throughout London, we are going to wait and see. We're going to wait and see if price respects our bias. So here we can label it as a draw of liquidity. That's where we want price to go after we get our confluences. So price came back here, took out our low, and then yeah, price came back and took out our low, and then it gave us a high, and then it continued to play around. As I'm looking at this chart right now, I don't see any of my confluences, so I'm just going to wait for price to give me what I would like to see on the market. And then price continued to go up and up throughout the London session, up, 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 up. Now it's New York, and then price went down. As price went down, some would use this imbalance. Some would use this imbalance as a springboard to come and bounce and then push to the upside. So me, just because of I like to take precautions as I trade, I waited for this price to form like this here. I waited for price to form like this so that it can give me a structure shift. A structure shift. What is a structure shift? A structure shift is when we are no longer looking for sells but now looking for buys. So price gave us a high here, and then we can also mark this as a sell side liquidity. Why we are marking this one as a sell side liquidity? Because it's the last low prior to the last low prior to the New York session. This is the last low prior to the New York session. This one. Last low prior to New York session. We took that low, we went up, and then as we go up, we had a shift in market structure here. We had a shift in market structure. So as price come down, we want to see price touching the premium side of of our imbalance or the 50% mark. You can do it like this, or you can pull out your fib. Low, high. This is our 50% mark. The reason why we see this price, we see this as a continuation of a buy, is because we had an imbalance here that was not filled. Price went up, gave us a low, still didn't fill this gap, and then price went up and then came down and took this low, and then price didn't close below this gap. So our conferences were met here. I think we had over 3 conferences that were met here. We had over 3 conferences that were met here. We can put this one as a fair value gap. I'm not going to see it, so I'm gonna put it like this. Yeah. So as we look at this imbalance, here, price came down, gave us this low, it didn't test this imbalance, and then price went up, and then it came back, it took this sell side, and then it touched the 50% mark of our displacement, and then price closed above even though this second candle went down a bit, but it didn't close above this fair value gap. So this was another entry for those that like to enter at the lowest of the price to get more profits. But you know how I do it. I keep it simple. I don't like stress. I don't like unnecessary stress in the market because mm, I'm trading a funded account now, so I need to be cautious and follow their rules. So when I look at price like this, I see that okay, we already took out the lows here. We are done going down here. So we're going to look for an imbalance. Some will also wait for this imbalance. But as we can see, price didn't come and test price didn't come and test this imbalance. It took out the first one. Or also one might say low, high. When we measure this movement, we are going to look for a 60.6, no, 25%. I'm using this wrong. We need to use this area. Yeah, yeah, this area because it's where the buy program started. So as we're looking at this low and this high, we even touched the 50% of this fair value gap. If you look at it properly, we touched the 50% of this fair value gap. Let me remove this. You can see it. You see, this is the 50% of a fair value gap. So it's either you can use it like this, enter here on the fair value gap, enter here on the fair value gap. This shows that our fair value gap here it was valid. So price came down and touched the 50% of the fib of this whole movement, and then it validated our fair value gap, and then it continued to go up and touch the liquidity pool. So this would have been a very, very, very nice 100 pip. I mean, a $10 move because I measure it in dollars. This is a nice $10 move. A nice $10 move, you know. So yeah, this would have been a very nice entry. So we now we're going to go to the one that I would have taken. The one that I would have taken is this one. This one. Put my stamp and then get out here. Short, nice market move. No, 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 no looking at many things. So I'm getting distracted. There's people today here in the crib. So I can't really pay attention. So I'll try to be as professional as possible. So here is a family gap or family gap. So we're gonna use this. This is the 50% of the family gap. This is the 50% of the family gap. So now we already know that price is going up. So now we just want a price to respect this premium level of the fair value gap. This is the upper part. This is the upper part of our initial fair value gap. So we want price to touch the 50% of our premium level of the fair value gap. It touched it and then it went up. I think here we would have gotten our $5 move. Yes, we would have gotten it. Nice entry as well. So this was a two move entries where I've entered someone who would have taken their take profit right at this area here. If you entered here, your first take profit is here, and then your second take profit this high that we got on the London session. Mhm. Okay. I want to keep this video as short as possible so that we don't get bored while backtesting. Because backtesting is one of the most boring things to ever do in trading, but it's very, 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 very important. So that is why I try to backtest whenever I get a chance, because I know that it's going to help me in the long run. So London, London here. This is Tuesday, no? New York. So price came down, gave us a low, took that low, gave us another low, and then we're gonna use this low. I'm gonna take this low, I'm gonna use this low, market as our sell side liquidity. Then sometimes we don't go for this high price. I like to measure my fair value gaps. I like to measure my candles. I see, okay, price here gave us a last green candle, red, green. We took this high. This is a small high, or you can say a previous high. We took it here, and then we're gonna measure from this candle. 1, 2, 3. We're gonna look for a fair value gap. I like to use the middle candle as a fair value gap because when I backtest, I like to use the middle as a fair value gap. So this is our CB, self-setting balance backside inefficiency. So if if you're looking for a gap, if you're looking for a gap, if you're looking for a gap for a buy or for a sell, you're gonna use this one. And then price gave us this low, and then it went up, and then came back. 1, 2, 3 candles. We look for what? The middle candle. Here's the middle candle. 50% of the middle candle was mitigated, and then we measure our gap, and then we target the CB. We target the CB. Stop loss right below our recent low, or we can put it here at 50%. It's also fine. It's also fine here at 50%. And then here we would have had our $7, $8 move, which is 90 pips when using gold. It's not a bad entry. So usually after I have my targets, I stay away from the charts because I don't want to give bad profits. So even though here we had a very nice entry as well, this is a very nice entry. This is a very nice entry, relatively equal low. Sorry about that, guys. Relatively equal low is our sell side. I'm going to remove this one to see something. Yeah, our sell side. And then here we're going to measure our recent high that we expected price to take. Here is it the high, shifting market structure, 1, 2, 3 to the displacement. We don't have a middle candle because this one is a doji, so we're gonna use this favorite gap here, even though it's a small favorite gap, but yeah, you could have entered here and then you get out here or hold it until you take this high here that we got after Landa, before Landa. So I like to keep it simple. I like to trade set after I day. I don't like to trade things that are not on the chart so that I'm trying to be perfect here when I'm backtesting. No, I want to be as authentic as possible because I know that price moves at a particular time and I need to know where I'm entering and where I am going to exit my entries. Like you see here on Wednesday, this was a very, very bad chart for me. It was a very bad chart because I couldn't enter anything because the price was ranging and then price went up, and then it was continuing to range here. I think that this was this candle. Okay, I think this is when Chairman Powell was speaking, the Fed chair, and then even if you can measure this, you can see that price was playing around here. You can just see that price is playing around here. So as soon as we got this this condition here, as soon as we got this condition here, that's when we started to look to see if price will go down. Remember, we're testing, so during a move like this, I was not going to enter because I know that I can handle a drawdown, especially in a ranging market. So price gave us a 1, 2, 3, 4. So we're going to use this one, 1, 2, 3. Let's see if price even touched that area. It looks like it did, but this is an entry that I was not going to take because price was already doing a madness here. But now because we're back testing, let's mark it out. Let's mark it out. Yeah, not a bad entry, not the one that I would have taken, but yeah, I guess some would have taken that trade, but me, I don't wanna lie, I was not gonna take that trade. I was not gonna take that trade. Okay, on to Thursday. On to Thursday. London open. Price was moving. When I don't see anything on the chart, I remove myself from the chart because I don't want to get FOMO. Yeah, this is the entry that I caught. I can remember this setup very well, very well, very well. Like when I put a chart like this, tell me, or maybe you can comment, what did you see first here? Because here I have written down rules that I want to see on my chart before I take my setup. So here, when I'm looking at price like this, I see at least 4 of my conditions that I need to see on the chart. Classic ICT movement here. I think this is one of the simplest models that he taught um, his followers. This is the simplest model. Change in market structure. Even if you don't want to put the buy side liquidity here, it's okay. You can just start here. You can just start here. You see, you can just start here. And then we had in balance. One, one, two, three. We measure the middle candle. Let me remove this for now. I don't know if there's a candle there. Okay, that was correct. We measure it. We want the lower quadrant of the fair value gap because we are looking for a sell movement. Sometimes we don't want price to reach a 50% mark. We just want the lower quadrant of the fair value gap. You measure it like this. And then just count. So price came in, touched, went down, came in. We target this low. Target this low. We took it nicely. We took it nicely. And then we look for another low, which is here. Also took it nicely. Even here, if you missed the initial entry there, this is one of my biggest trades that I've taken. This week. This is one of my biggest trades that I've taken. Yeah, I knew because it gave me some good price movement that I was looking for. So here we had a shift in market structure again. Then price went up. You can measure this as well. The fair value gap. Move on. And price continue to go down a bit and then it went back up. So yeah, Wednesday. Here's our side. Our chart for Wednesday. No, Thursday. Sorry, Thursday. And Friday. Let's see what price did. This is a price was moving crazy here, man. Yeah, here I don't wanna lie, I didn't take any setup. I didn't take any setup. I didn't take any setup, but even though I can see that price was moving, well, I didn't take setup. So yeah, I would have taken one. Always take clear entries. Respect your trading plan. Two, and your trading journal. And journal each and everything that you see that can be useful for you in the market. Three, and then four. So guys, sorry for an unprepared video. Next week I will try to be as professional as possible. Thing is, there's people here they are in the yard, so it's a bit busy today here at home. But next week you're gonna get a full, proper backtesting video with more information and how I clearly would have taken the setups and how I was going to look for opportunities within my trading plan and respecting risk management. So until next time, guys, have a good weekend. Also, back test there on your side and then take notes. And then if you have any questions that I might help you with, You are welcome to put them on the comment in the comment section, and then I'll try to respond to you as swiftly as possible. Have a good one. Take care.